You know the drill, like and subscribe to Stock Analytics AI. And, hey, for just $4.99 a month, members get to pick our next deep dive.
Yeah, got a ticker you're curious about? Let us know.
Exactly. Welcome back, everyone, to the deep dive.
Where we basically wade through all the info for you.
Yeah, we take that stack of sources and boil it down to the key stuff you need.
Helps you stay informed without, feeling overwhelmed.
Like drinking from a fire hose, right?
Exactly. So today we're tackling a listener request, diving deep into Spire Global.
SPIR is the ticker symbol.
Correct. And you shared their SPI Stock Deep Research Analysis with us.
So our mission today,
Right.
really get a handle on their business.
I'm trying to figure out its long-term potential. It's kind of an evolving space data company now.
Absolutely. And as always, if you want to dig into the source material yourself,
It's all linked down below in the description.
go check it out.
So our plan for today, it's kind of in two parts.
Okay.
First up, we'll really try to understand Spire's operations.
Get a grip on what they actually do.
And then we'll take a look at their leadership and, importantly, their financials.
Right. And then in the second half,
We'll gauge the market mood, the sentiment around Spire.
see who owns the stock.
Look, the ownership structure, yeah.
Huh.
And then break down the risks.
Always important. SWOT analysis time.
You got it. And then we'll wrap it all up with our final thoughts.
Okay, sounds like a plan. Let's unpack this. Starting with the basics. What exactly is Spire Global?
Okay, so at its heart, Spire Global is all about space-based data.
Data from space.
Right. And analytics and also space services. What's really interesting is their own constellation of satellites.
They build their own?
Yeah, over 100 of them. They call them LEMUR satellites.
LEMUR.
Stands for Low Earth Multi-Use Receiver.
Yeah.
And they mainly use radio frequency tech, RF tech, to gather data.
Okay, so RF signals from space. What's the key takeaway there?
The key thing is their ability to collect these unique signals for all sorts of applications.
Right. And didn't they just make a big change? Something about selling a part of the business?
Oh, yeah. Huge move. They sold their maritime business back in April 2025.
Okay, so that really sharpened their focus, didn't it?
Precisely. After that sale, Spire is now really zeroed in on three main areas.
What are they?
Okay, first, aviation solutions. This is all about data and analytics for aircraft monitoring.
Route optimization, that kind of thing.
Exactly. Aiming to make flying safer and more efficient for airlines, air traffic control, you name it.
Right.
They actually just landed a contract with a company called Consiris.
Consiris. What for?
Their aviation data is going to be used for insurance risk assessment.
Interesting. So applying space data to real-world aviation problems.
That's the crucial takeaway, yeah.
Okay, so from the skies down to the atmosphere itself.
Yeah.
They're also big into weather solutions, right?
That's the second core area, generating global weather intelligence, again, from their satellites.
And there's something exciting happening there, too, is there?
AI. Yes. This is pretty cool. They're developing new AI-driven weather forecasting models.
AIWX and AIS2S.
Those are the names, built on NVIDIA's Omniverse platform.
Wow. And what's the big deal about these? Speed.
Speed is a huge part of it. The key insight here is a potential 1,000-fold speed increase in forecasting.
1,000 times faster. That could be a massive edge.
It really could, giving them potentially much faster, more comprehensive weather intelligence.
Okay, AI weather models running that much faster. This is where it gets really interesting. Tell us more about what they can actually do.
So these AI models, they offer medium-range probabilistic forecasts.
How far out?
AIWX goes up to 20 days, and AIS2S goes up to 45 days.
45 days. Wow.
And they feed them with a whole load of proprietary satellite data. Things like atmospheric profiles, soil moisture.
Ocean surface winds, too.
Exactly, all integrated. And like we said, they reportedly do this about 1,000 times faster than the old-school physics models.
So much quicker predictions, potentially more accurate, too.
That's the idea.
Sounds like a serious tech advantage.
Yeah.
What's the third core area, then?
That would be space services. You often hear it called Space as a Service, or SaaS.
Okay, space sauce. What does that involve?
It basically lets other customers, often government, defense types, use Spire's satellite infrastructure.
So they don't have to launch their own satellites.
Exactly. It's like offering software in space or letting them put a payload in space on Spire's existing platform. Saves immense cost.
Makes sense. Any big wins there?
Oh, yeah. A huge highlight is getting selected for the U.S. Space Force's STEP 2.0 program.
STEP 2.0, how big is that?
It's an IDIQ contract, so the ceiling is up to $237 million over 10 years.
Wow, okay. significant.
Definitely. And they also landed their largest contract ever with the government of Canada.
For what?
$72 million for wildfire monitoring. Shows governments are really starting to adopt these kinds of services.
Okay, so you've got these three areas, this cool tech.
Yeah.
How does it all actually make money for Spire? What are the revenue streams?
Well, most of it comes from subscriptions,
Yeah.
subscription-based data services across aviation and weather,
Right.
and then also from these custom space service contracts like the government ones we mentioned.
And where are their customers based? Is it mostly U.S.?
It's pretty global, actually.
Yeah.
In Q1 2025, let's see, 57% of revenue was Americas,
Okay.
34% was EMEA, that's Europe, Middle East, Africa, and 9% was Asia Pacific.
So a decent spread.
Yeah, a fairly global reach.
Let's dig a bit deeper into the tech itself. What are the core assets underpinning all this?
Well, the foundation is really that Lemur satellite constellation.
The low Earth multi-use receivers.
Exactly. And they've got a serious track record, over 600 cumulative years in orbit.
600 years.
Across the whole fleet, yeah.
Yeah.
And they've iterated the design over 30 times.
So constantly improving them. What sizes are they?
They come in standard CubeSat sizes, 4U, 8U, 16U, lets
Yeah.
them handle different payloads.
And how do they get the data down?
They have a global network of over 55 ground stations.
Okay. Anything else cutting edge on the tech front?
Yes, something particularly noteworthy is their successful demo of two-way optical intersatellite links. OISL.
OISL. Laser communication between satellites.
Pretty much, yeah. The aim is to dramatically boost data speeds, improve security, and cut latency.
That sounds like a big deal.
It could be. They plan to launch more OISL-equipped satellites by the end of 2025.
So that could be a key differentiator for them, faster, more secure data.
Potentially, yes.
Now let's go back to that maritime business sale. You said it was huge. How critical was that deal with Coupler?
Oh, it was absolutely pivotal. Crucial for their financial restructuring.
How much did they get again?
$233.5 million in cash, plus another $7.5 million service agreement.
And what did they do with that cash?
Paid off all their debt, every bit of it.
Wow. Zero debt. That's massive.
It was a major step, huge for financial stability, and it lets them really focus resources on the other three segments.
So the key insight there is just de-risking the balance sheet. Big time.
Absolutely. Immediate de-risking.
Okay, so with maritime gone, what's the core strategic advantage now for Spire's remaining business? What's the model?
Well, a primary advantage, arguably, is their vertical integration.
Meaning they do everything in-house.
Pretty much, yeah. From designing and building the satellites, to operating the missions, to delivering the data products.
What are the pros and cons of that?
Pros are potentially more control, cost efficiencies, maybe faster deployment of new tech.
And the cons?
Cons are it's really capital intensive and operationally complex. Lots of moving parts.
So what's their fundamental value proposition boil down to then?
Ultimately, it's providing unique data from space.
Data you can't get elsewhere.
Right, and translating that into actionable insights so customers can make better decisions, improve safety, boost efficiency.
Let's zoom out for a second. What's the bigger picture here? What industry are they playing in?
We're talking about the new space economy.
New space. Lots of buzz around that.
Definitely. It's characterized by much more commercial activity, lots of private companies getting involved.
What's driving that growth?
A few key things. Big demand for Earth observation data across many industries.
Government spending more on space, too.
Yep, government budgets are up. Plus, rapid advances in AI and machine learning crucial for making sense of all that data.
And smaller satellites like Spires are a big part of it, right?
Exactly. The proliferation of these smaller constellations is a defining feature.
But it can't be easy. What are the main challenges, the hurdles for companies trying to make it in this space?
Oh, there are substantial barriers to entry. First off, just the sheer amount of capital needed up front.
Building and launching satellites isn't cheap.
Not at all. You also need really deep technical expertise, satellite engineering, data science.
Regulations, too, I imagine.
Complex and evolving regulations, definitely. Plus, getting reliable, affordable launches. Building a global ground network.
And, of course, competition.
It's getting crowded, yeah.
Which brings us to a critical question for any investor. Does Spire actually have a sustainable competitive advantage? A moat?
That's the million-dollar question, isn't it?
Or maybe the $382 million question based on their market cap?
Right. Well, currently, any economic moat seems to be, let's say, in its early stages, nascent.
Okay, so where might it come from? What are the potential sources?
Potentially, their proprietary lemur tech. and the massive historical archive of RF data they've collected.
That data archive could be valuable.
Could be. Also, their advanced capabilities, like the OISL we talked about, the AI weather models.
Vertical integration could help too.
Possibly. And their growing relationships with government clients, those big contracts, those could all contribute over time.
So it's a work in progress. Who are they actually competing against in each area?
Okay, let's break it down. In aviation solutions, you've got companies like Aerion, FlightAware.
They do aircraft tracking too.
Right. Plus some overlap with more traditional Earth observation players like Maxar, BlackSky, Satellogic. Spire uses space-based ADS-B data.
Got it. What about weather?
They're up against the established weather services, government agencies like NOAA.
But Spire actually supplies data to NOAA, right?
Right. Correct. And then there are other new AI weather companies emerging, like Tomorrow.io.
So Spire's unique data and AI models are the differentiators there.
That's the argument, yes. And finally, space services.
The SaaS part.
Yeah. Competitors there include small satellite manufacturers like AAC Clyde Space, Nano Avionics, ISIS Space, York Space Systems.
Even launch providers?
Yeah, Rocket Lab and satellite bus makers like Blue Canyon. It's a varied field.
But getting that USSF Step 2.0 contract was a big win against that competition.
A very significant competitive win, yes.
So overall market share, where does Spire stand? Is it a big fish or a small fish?
Well, based on figures from Q4 2024, before the maritime sale, they had about 2.77% revenue share within a defined competitor set. So relatively small still.
Okay, so the key takeaway here is unique tech, promising markets, but that durable moat, the kind that generates consistently high returns.
That's still the goal they're working towards. Not quite there yet.
All right, let's shift gears. Let's talk about the people running the show, the leadership team at Spire. What's the situation there?
Well, there have been some pretty big changes recently in management.
Like the CEO?
Exactly. Teresa Condor took over as CEO in January 2025.
Okay. Any details on her compensation or ownership?
Her comp package is pretty substantial, and she holds a small ownership stake, around 0.5%.
And Peter Platzer, the founder, is he still involved?
Yes, Peter Platzer, co-founder, former CEO. He's now the executive chairman.
Okay, so still playing a key role.
Seems so. He has a strong background, and there was a wider executive refresh around Q1 2025, too.
New CFO, COO.
Yep, new CFO, COO, chief legal officer, even a chief transformation officer, kind of an entirely new top team.
Interesting. What's the average tenure look like, son? Seems pretty short.
It is. Average management tenure is about 1.5 years right now.
Versus the board?
The board's been around much longer, average tenure over 10 years.
It's interesting. Platzer founded the company, visionary guy, but he was CEO during that unprofitable period and when those accounting issues surfaced, right?
Oh, that's correct. There were challenges under his CEO tenure.
So what's the early read on Condor as CEO? How's she doing?
Well, it's still early days for her as CEO, obviously. But her previous COO experience is definitely relevant.
And she stepped in during some tough times.
Yeah, she led during the restatement process and that crucial maritime sale. Those were big tests.
Any external views on management?
Simply Walst gave them a pretty low score, 1 out of 4.
Why was that?
Citing CEO compensation being above average compared to similar unprofitable companies.
Okay. What about insider ownership overall? You mentioned Condor's stake.
Insider ownership is actually reasonably significant, somewhere between 17% and maybe 22.5%.
They'll hold that.
Platzer still holds a substantial stake. Condor, as mentioned. The chief legal officer got a recent share award, too.
And usually high insider ownership is seen as a good sign, right? Aligns interests.
Generally, yes. It suggests management's interests are tied to shareholders.
Okay, now, we have to address the elephant in the room, the past accounting issues. That's a big red flag for value investors.
Absolutely. It's critical. In 2024, Spire admitted to accounting errors.
What kind of errors?
Mainly around revenue recognition in space services and how they handled embedded leases.
And that led to restatements.
Big ones, yeah. Restated financials for FY22 and FY23. It even raised concerns about possibly violating their debt covenants at the time.
Ouch. Weren't there other issues too? Filing delays?
Yes. Delayed Q2 2024 filing and an amended 10K filing that initially missed the auditor's going concern note.
That's not good. Serious issues that really hit investor confidence.
Definitely.
And the market noticed, right? Lawsuits.
Oh, yes. Shareholder class action lawsuits were filed, alleging false and misleading statements between 2022 and 2024.
Any other legal friction?
There was even some initial trouble closing that maritime sale to Kapler. Spire actually filed a legal complaint to push it through.
Wow. So, quite a bit of turbulence.
Understandably created uncertainty, yeah.
It sounds like the new CEO, Condor, has acknowledged all this publicly, though.
Yes, she addressed it head-on in the Q1 2025 earnings call. Talked about extraordinary challenges.
And trying to signal a fresh start.
Emphasized a new moment for Spire. Focus on profitable growth, execution.
But still, for value investors.
For value investors, these historical accounting problems, the internal control weaknesses, they're significant red flags. Trust in financial reporting is crucial.
So it's needed now.
Building a consistent, reliable track record, flawless financial reporting, effective execution under this new leadership, that's absolutely paramount to regain confidence.
Makes sense. Okay, let's pivot to the numbers themselves. The current financial health. What are some key metrics right now?
Okay, so as of mid-May 2025, the share price was around $11.73.
Giving it a market cap of?
Roughly $382 million.
And earnings, PE ratio.
Well, trailing 12-month EPS is negative, about negative $3.85. So no meaningful PE ratio right now.
What about price to sales?
Trailing 12-month PS was around 3.46x. But that's based on FY24 revenue before the maritime sale.
Got it. So how did they do in the most recent quarter, Q1 2025?
Q1 revenue came in at $23.9 million, which actually beat the analyst estimates.
Okay, better than expected top line. What about profits?
Well, gross profit was $8.784 million, giving a gross margin around 36.8%.
But operating loss, net loss.
Still losing money, yeah. GAAP operating loss was $19.6 million. GAAP net loss was $20.6 million, or negative 0.77 per share.
And adjusted EBITDA.
Also negative $7.9 million.
Any bright spots in Q1?
Cash flow. Cash flow from operations actually improved 5% year over year, which is positive.
But free cash flow?
Still negative $17.3 million for the quarter.
Okay, so still burning cash. What's their outlook for the rest of 2025?
Their guidance, as of mid-May, they project revenue between $85 million and $95 million for the full year.
And that's excluding maritime, right? Pro forma growth.
Exactly. That represents about 12% to 17% pro forma growth.
Still expecting losses, though.
Yes. Non-GAAP operating loss projected between $43 million and $35 million. Adjusted EBITDA between $24 million and $16 million.
Loss per share.
Non-GAAP loss per share expected between $1.80 and $20.51.
What about spending? CapEx.
They plan $8 million to $10 million in platform and infrastructure CapEx.
And cash balance at year-end.
They expect to end the year with over $100 million in cash.
Okay, now we talked about those restatements. If we look back at the restated FY23 figures, what's the picture?
Right, the restated 2023 numbers. Cash was about $19.2 million. Total assets around $193.6 million.
Liabilities, equity.
Total liabilities were higher than assets at $205.3 million. That resulted in a stockholders' equity deficit of about $11.8 million at the end of 23.
Oof. Deficit. What about revenue and loss for 23?
Restated FY23 GAAP revenue was $110.5 million, up about 32% year over year.
Yeah.
Non-GAAP operating loss improved to negative $35 million, but that was a 16% improvement.
But again, caution needed with these historical numbers due to the restatements and that going concern flag previously.
Absolutely critical to keep that context in mind.
So let's talk about financial stability. Before and after that maritime sale, it sounds like it changed everything.
It was genuinely transformative for the balance sheet.
What did it look like right before the sale, end of March 25?
Assets, $208.08. Liabilities, $186.10. But importantly, that liability included over $100 million in current debt.
So equity was positive, but thin. Around $23 million.
Exactly. Then the sale brought in $136 million cash, wiped out all the debt.
What does that do to their liquidity, like the current ratio?
It improves dramatically. Our estimate for the pro forma current ratio post-sale is around 3.43, much stronger short-term position.
And they're aiming for positive cash flow soon.
Targeting positive operating cash flow in the second half of 2025.
Supported by cost cuts. Headcount reduction.
Yes, headcount reduced from about 450 down to around 380.
So fundamentally, the balance sheet is de-risked, gives them breathing room, strategic options.
Crucial operational runway and flexibility, yes.
So how are they thinking about using that cash now? Capital allocation priorities.
Well, historically, a lot went into building these satellite constellation and acquisitions, like Exact Earth.
Right.
The maritime sale cash primarily went to paying off debt, as we discussed.
So the cash they have now and expect to keep, what's the plan?
Near-term growth in the core businesses, aviation, weather, space services, and potentially some strategic M&A down the line.
Okay. They had about 36 M&M cash in Q1, got 136 M&Ms from the sale, expect $100 end of year.
I'm planning 8-10M in CapEx for FY25.
What about returns, ROIC?
Still negative. Fintel reports it around manage 0.80 current.
So the key going forward is, can they deploy this cash effectively, wisely?
Absolutely. Disciplined, value accretive strategies are critical, especially given the past unprofitable growth.
Okay, finally on financials. Intrinsic value. The Buffett approach. How do you even begin to assess that for SPIR right now?
It is exceptionally challenging, really difficult.
Why? Because of the losses, uncertainty.
All of the above. History of losses, uncertain forecasts, the dynamics of the space industry. Traditional models struggle.
So you have to lean more on qualitative factors.
Much more. Potential moat development, management quality, growth prospects, how they use their capital.
Asset-based valuation isn't much help either, though the equity picture improved post-sale.
Right. It provides a limited view. The real focus has to be on achieving sustainable profits and positive free cash flow.
So for a value investor, what's required?
A significant margin of safety is an absolute must, given the uncertainties.
It sounds like SPIR is really a story stock right now, a transformation story.
That's a good way to put it. Its valuation hinges heavily on them executing their plan successfully.
Any external value estimates?
Guru Focus had a GF value estimate of around $9.06, but that was before Q1 results and the full maritime impact.
Suggesting it might have looked overvalued earlier.
Potentially.
All right, let's shift gears into the second half of our deep dive. Let's talk about market sentiment. What's the general feeling out there about SPIR?
It really seems quite mixed right now. You've got definite optimism about the turnaround potential.
Driven by the maritime sale, the cleaned-up balance sheet.
Exactly. But that's balanced against caution. Lingering concerns from the past, accounting issues, and a lack of profitability track record.
What are the analysts saying, especially after the latest earnings?
Post Q1, analyst ratings have generally tilted positive, seeing quite a few outperform or buy ratings.
And price targets, where do they see it going?
The targets vary, of course. Zacks had an average around $14.83 with a range from $7 to $20. Fintel's average back in April was higher, over $17.
Any specific analyst moves? Upgrades, downgrades?
Yeah, Stifel cut their target but kept a buy rating at $17. Canaccord raised theirs to $16 buy. Baird raised to $13 but stayed neutral.
So mostly positive leaning. What are the key themes in their reports?
Common themes are the Q1 revenue beat, the much stronger balance sheet now.
The debt being gone.
Right, and the expectation for revenue to pick up and maybe hit operating cash flow break even in the second half of 25.
Potential for M&A too, using that cash.
Some analysts noted that as a possibility, yeah. Strategic acquisition.
Okay, but it's not all positive vibes, is it? What about short interest?
Ah, yes. That's a very important counterpoint. Short interest is notably high.
How high?
Around 3.6 million shares shorted last check. That's over 13.5% of the float. Takes over 5 days to cover.
That's significant. Suggests a strong contingent betting against the stock.
It does indicate considerable bearish sentiment or skepticism out there.
And the news flow. Is it helping or hurting sentiment?
It's been a mix, really. Positive news like the maritime sale closing, debt gone, new contracts, those AI weather models.
On good stuff.
But then you still have the shadow of the accounting issues, the lawsuits, the history of losses. Those concerns haven't just vanished.
Did the stock react well to the Q1 earnings?
It did see a positive move after the Q1 report, suggesting the market liked those results specifically.
So, summing up sentiment, divided. Optimism from the new SPIR versus caution from the past and the profitability hurdles.
That seems like a fair summary. A tug-of-war between hope and history.
Okay, let's look inside the company now. Who actually owns SPIR? What's the ownership structure?
Institutional ownership is pretty significant.
How many institutions? What percentage?
Around 190 institutional investors hold about 14 million shares. That's roughly 45% of the outstanding stock.
Who are the big players? Any familiar names?
Yeah, some recognizable ones. 325 Capital, BlackRock, Alyeska Investment Group, Vanguard, Granahan Investment Management are among the largest.
Have there been any big changes recently? Institutions buying or selling?
It looks like Granahan and Alieska increased their holdings recently, which could be seen as a positive sign.
Okay. And what about insiders?
Yeah.
Management board members, we touched on this earlier.
Right. Insider ownership is also quite high. Estimated range is 17% to maybe 22.5%.
Including CEO Condor, exec chair Platzer?
Yep. Platzer still holds a substantial amount, though he did sell a small number of shares recently. And the chief legal officer got a 60,000 share award.
And again, significant insider ownership is generally seen as good. Alignment.
Typically viewed positively, yeah. Suggests insiders' interests are aligned with shareholders.
And those big institutions, they can influence things too, right? Governance, strategy.
Absolutely. Large institutional holders can definitely have a say in how the company is run.
Okay, now for a critical section. Risk assessment. Let's break down the potential downsides using that SWOT analysis from the source material.
Right. SWOT. Strengths, weaknesses, opportunities, threats.
Let's start with strengths. What's working in Spire's favor?
Key strengths are their proprietary tech, like the LIMR satellites and RF data. Diversified revenue, now post-maritime sale. That improved balance sheet with zero debt is huge.
Government contracts are a strength too.
Increasing traction there, yes. And their innovative capabilities like OISL and AI weather.
Okay, now for the weaknesses. What are the internal challenges?
The big one is the history of unprofitability. That's a major weakness. The past accounting issues have damaged trust.
The newness of the exec team.
Relatively new team, yeah. Complexity in revenue recognition was an issue, and their gross margins have been challenging.
Got it. Now looking externally, opportunities. What potential upsides are out there?
The overall market for space data is growing rapidly. That's a big opportunity. Increased government spending helps too.
Specific areas like AI weather.
Growing demand there, yes. Potential to leverage their space as a service platform more, and maybe make smart acquisitions.
Okay, and the flip side, threats. What external factors could hurt Spire?
Competition is intense and growing in all their segments. That's a major threat.
Risk of being leapfrogged by new tech.
Always a risk in this field. Execution risk is huge too, actually achieving sustained profitability.
Geopolitics.
Tariffs.
Geopolitical instability could impact global operations. Those U.S. tariffs we'll discuss. Ongoing litigation is a threat. And dependence on key customer contracts, especially government ones.
Let's dive into those U.S. tariffs imposed in 2025. You mentioned them as a threat. How could they specifically impact Spire? Right, those tariffs could create headwinds for aerospace companies, mainly through higher costs for raw materials and electronic components needed for satellites.
But Spire builds satellites in the UK and Canada, right? Does that help?
It might help avoid direct tariffs on their finished satellites, but their supply chain for components could still be hit.
What kind of components?
Things like imported steel, aluminum, electronics, composites. If tariffs raise the cost of those.
It could squeeze their gross margins, which you said are already challenging.
Exactly. It could pressure margins. It might also shift to competitive dynamics depending on where competitors source their parts.
So even with manufacturing outside the U.S., they're not totally immune. Component sourcing is a vulnerability.
Potentially, yes. Their multinational footprint helps with finished goods, but component sourcing could be an issue.
What about space services for U.S. clients affected?
Depends on where the components for those specific services originate and where final assembly happens.
Did Spire say anything specific about tariff exposure in the source material?
No specific statement mentioned in the material we reviewed, so it's an area to watch.
Okay, so wrapping it all up now, let's get to the conclusion. What's the final verdict on Spire Global for a value investor?
Well, look, Spire has definitely gone through a major transformation.
More focused, much healthier balance sheet. That's clear.
Absolutely. And they're in markets with a real growth potential. They're winning significant contracts.
But the big but for a value investor.
The historical lack of profitability is the big one, and the need for the new management to really prove themselves regarding financial stewardship and rebuilding trust after those past issues.
So demonstrating sustainable, positive free cash flow is the key hurdle.
That's the acid test. Investors need to see that consistently.
And that competitive moat still needs building.
Still looks nascent, yeah.
Early stages.
So execution and transparency from the new leadership are absolutely critical.
Paramount. Their future success hinges on it.
Which makes assessing intrinsic value right now very difficult with confidence. Underscores the need for a big margin of safety if you were to invest.
So it's really more of a turnaround play at this point. Needs close monitoring.
That's how it appears, yes. A turnaround situation requiring careful tracking of performance and execution.
And for any listener considering Spire, some key questions they should probably ask themselves.
Can they actually achieve and sustain profitability in these core businesses?
Will they build a real, durable competitive advantage?
Can the new management establish that consistent track record of reliable reporting and effective execution?
And will their capital allocation choices actually create long-term shareholder value?
Those are the crucial questions.
Okay, and now for the hook reveal.
Subscribe, Stock Analytics AIYT.
And the necessary disclaimer. Research and AI disclaimer. Well, thank you for taking this deep dive into Spire Global with us today.
We've covered a lot of ground business model, financials, sentiment.
Yeah, scrutinizing this evolving space data company.
I think the key insight really is that while they've tackled the immediate financial stability problem,
The debt is gone.
right, but the journey towards sustained profit and building that strong competitive position, that's the main story investors need to watch now.
Absolutely. As always, we strongly encourage you to do your own homework, your own critical analysis.
Definitely. Consider Spire's long-term potential for yourself.
And maybe one final thought to leave you with.
Yeah, as you do your research, think beyond just the financials. Consider the broader implications of this commercial space data sector.
Like what?
Well, think about global environmental monitoring or improvements in weather forecasting, saving lives and resources, or just the future tech innovations companies like Spire might enable down the road.
Interesting perspective. Lots to think about. Thanks again for joining us on the deep dive.